Hi, everyone. My name is Timmy Lassard, and I'm from Zink Pay. I'd like to thank everyone who is participating in the Zink Pay Q&A. I also like to thank Eureeca and the opportunity to present what is Zink Pay and to answer any questions and answer. So first off, I'd like to introduce the team. Again, my name is Timmy Lassard. I'm the co-founder and co-CEO of Zink Pay. I look after product strategy, product development, and product management. My other co-founder is Padraig. I'll let him introduce, and then Ms. as well.
Good evening, everybody. My name is Padraig McGreal, co-founder and co-CEO of Zink Pay. My background and responsibilities within Zink Pay is for legal, compliance, and risk.
Hi, everyone. My name is Ms. Rahman. I am Head of Strategic Partnerships at Zink Pay. I'm also an investor in Zink Pay, and I've joined the management team.
Thank you, Ms. So what you need to know about Zink Pay is that Zink Pay is aiming to solve three major problems in the UAE and the wider GCC market. First off, checks are super expensive in the UAE. And you might think to yourself, aren't they free? But they're actually not. They're actually a large cost. So in the UAE, there's 21 million checks that are processed each year. Now, with 21 million checks, that's value of over 300 billion USD in total value. That's a lot of money that's being processed by checks. So what is the real cost of checks? Surely it's a paper-based form. Surely it should be, relatively low cost. But in actual fact, if you think about the cost of checks, it takes thousands of hours per month for billers, especially large billers, to manage checks. And that includes the time taken to process checks, the collection of checks, scanning checks. Some billers scan manually, some have automated scanning solutions, but it takes a lot of time and effort. Then you've got the depositing of checks, whether at lining up at the branch or going to the ATM to deposit those checks. And lastly, and the most costly, is the reconciliation of checks, the time taken to actually check to see who's paid and updating your systems manually. It costs an average biller about $5 per check. That's a lot of cost to process each check. The larger the biller, the more cost. But if you think about UAE of 21 million checks and it's $5 per check, it's around about $100 million US in wasted time and resources and cost of managing checks in the UAE. There's also a huge risk around the managing of checks and collection of checks. And we're seeing this today in a lot of check fraud and scams. So today in the UAE, a lot of recurring billing for services are managed by post-dated checks. So you're paying rent, they'll want 1 check, 2 checks, or 6 checks. But we're seeing in the UAE an average of 1.1 million checks bouncing per annual, and that could be for a number of reasons. But as I mentioned before, there are a lot of scams that are happening. There was one actually just recently, but we're seeing a lot of companies, especially that are using checks, creating scams for the purpose of defrauding billers. The market at the moment isn't accustomed to monthly payments. They are in certain industries, but when you talk about rent, when you talk about leasing, it's still expensive. Now, billers today still for rents demand upfront check-based payments. So 1 payment, 2 payments, maybe 3 payments. We are seeing billers go to quarterly, but it's highly inconvenient for payers. It's a huge cash burden around checks, as well as there's no transparency around checks. Billers can bank the check at any time. Now, it also limits billers' revenue. If you're asking for upfront payment for 12 months or biannually or quarterly, a lot of your customers who like your services, may not be able to afford it. but they would be able to afford it if it's monthly. And the industries that do today offer monthly payments will require customers or payers to pay those checks in monthly. So an example is car leasing. I recently got a car lease for 2 years, and I was required to pay 24 checks. So that means going to the office with 24 checks, which meant I had to go to the branch and order a couple of more checkbooks, because there's only 10 in every checkbook, and then to literally write out the checks and sign them, which there's a huge chance of risk and failure, and it's obviously time consuming on both sides. So what is Zink Pay's solution? Well, we are an aggregated payments and reconciliation platform. And we provide our clients and our payers an app and a portal that they can use to set up their payers, and they can create online direct debit through the Zink Pay services. And these direct debits are biller-initiated direct debits, which are very different to creating a direct debit on your internet banking, which is a payer-initiated direct debit. Now, when billers create direct debit via Zink Pay, not only can they manage their direct debits, they also get automated reconciliation. So through Zink Pay, we can inform them who paid, how much they paid, and to what account or policy or car that actually the money was paid to. We can automate that reconciliation directly down to the individual policy, and we match, and we can provide 100% reconciliation services to our clients, which is very different to what happens today. Now, we mentioned before that checks cost $5 per check. And when I said before, that's still quite expensive. At Zink Pay, we can do a lot better. It cost, using the Zink Pay direct debit system, $1.5 per payment. That is a huge save of up to 70% for any business. And what does that do? Will allow our billers to retain their existing clients, and they can attract new customers who would normally not use their services because it's too expensive, too much upfront payment. But now offering a monthly payment services, it will allow payers to leverage the client services, whether it's insurances, whether it's rents, whether it's leasing, whether it's school fees. A direct debit would take up to 5 minutes for a biller to add on, and that includes setting up the getting the payer's details, putting the payment, the amount, the frequency. Is it a fixed direct debit, or is it a variable direct debit? And all that takes is up to 5 minutes. That direct debit is then sent automatically to the Zink Pay payer app, which our payers download from the App Store and on board, and they see that direct debit online, and then they can accept the direct debit and sign. So what is an account? So every Zink Pay payer that is signed up against an account, and that account can be any bill, invoice, or subscription. So payers can have multiple accounts. So for an example, a Zink Pay payer could be paying their rent through Zink Pay, so that's one account. They could be paying their school fees, that could be another account, and they could be paying their insurance. We are focused in a number of regions, but in the UAE specifically, we believe that we can probably capture about in 3 years, 2.5 million active accounts. And across MENA, there are over 200 million potential accounts that we can open in 5 countries. So our target market is UAE first, which is our first launch. And then we plan to move into larger markets such as Saudi Arabia, Egypt, Pakistan, Indonesia, and Malaysia. So countries where they are predominantly cash or check. They each have their own problems. And the central banks have effectively announced that they want to reduce the dependency on cash and checks. And this is where Zink Pay can play a really important role in that migration away from cash and checks to an electronic-based reconciliation payment solution.
Now, our business model is pretty unique in the sense that Timmy has already defined what an account is, being any recurring bill a person can have or a business can have. Our aim is to acquire 10 million accounts within the next 3 years. Now, that is across the 5 countries, as Timmy has stated. And we will be earning $1 per account per month, with a projected revenue in year 2024 of 160 million. Now, our business, that dollar, if you will, is broken down into 3 segments. The first segment is our fee per active account per month, which will be worn by the biller. But that depends what in the agreement between the biller and the payer, whether the payer will wear it or whether the biller. But here in this slide, it's the biller that's wearing it. Now, our average, which that constitutes 30 cents. Now, the average transaction fee will be 60 cents. And the revenue share that we have negotiated with our partner bank is that we will receive 10 basis points of the interest, which the bank will earn in the overnight markets from the money sitting in our accounts.
So as mentioned before, we have an aggressive timeline basing on when Zink Pay will be available in some countries. So our first launch is at the end of Q1 this year, and that will be the UAE. UAE is a very good market to trial out. The government is quite supportive of initiatives and to move to cashless. We will then be aiming, while we're launching, is to begin our discussions. We've already started our discussions in Saudi Arabia, then Egypt in Q1 2023, and then looking to move into Pakistan, Indonesia, and Malaysia in the subsequent quarters. So these aren't our etched in stone, but these are our roadmap markets. So combined, you're looking at that's a population of 600 million. We think there are about 200 million accounts that could be up for grabs. And we're pretty conservative to think that we will get 10 million plus accounts by the end of year 3. So our total revenue forecast, as was mentioned before, the first year, because we're primarily building out into the UAE and just launching into the into Saudi, we project a revenue of about $713,000 US dollars. But the second year really kicks off. By then, we would have had more inroads into the UAE, and we would have been, launched our cards solution, as well as with the direct debit and wallets and cryptocurrency and FX payments. And we would start to see by year 3, we're moving into other markets. It's very important to note that what we're launching first is just our payments and reconciliation platform. We do have 2 other phases, which is our service now, pay later, which is sort of like allowing billers to take payment upfront for services of rent, and we collect the rent of the payers across the 12 months. That's got a lot of our banking partners and other larger investors very interested. And then phase 3, which is the data mining and analytics and direct marketing. So we'll be able to learn a lot about our customers and to be able to provide them with unique products and services. So if you've been paying your rent for 2 years or a year, and you've been paying 10,000 dirhams per month, you're pretty much good for a loan of a certain value. So that's a lot of data that we can feed into banking partners and other third-party partners. And of course, that entails some revenue that we earn from that as well.
Our market strategy is fairly straightforward. We are currently, and will continue to do in the future, establish strategic partnerships with banks, complementary businesses within the different industries, which will be real estate, banking, insurance, education, schools there, for example, etc. All our API technology can significantly benefit these verticals, like the banks, the insurances, and real estate. Our next piece in our strategy is to dominate search engines. We're a team that are very knowledgeable. We have extensive experience in finance and technology. And as you probably can see from our webpage, the content we produce is knowledge-based and factual-based, as well as bringing in our experience. And then our other piece to the strategy is awareness through education. And that's, being all over social media, campaigns promoting Zink Pay and Direct Debit and our reconciliation piece. And right now, there isn't, if you do your research, there isn't a lot around direct debit, particularly biller-initiated direct debit. So we want to be the market leader in this space. So when you see Zink Pay, it will be synonymous with direct debit.
So as I mentioned before, we've got an aggressive product roadmap. Our first one is the full payments and reconciliation platform. So that provides online direct debit agreements, and that can be via an account or from cards or from wallets or from cryptocurrencies. We're providing an invoicing solution, and our solution is we have an API management system that exposes our API. So every service that we provide on our portal and app is available for consumption via our APIs. The larger clients, such as major real estate or insurance company or leasing, can leverage Zink Pay by integrating the services into their own front end. So if our clients want to own the entire experience and manage it through their own front end, they can do that through our APIs. The second part is the service now, pay later, which I mentioned. And that's really got a lot of people interested, and especially because it's a little bit different to the buy now, pay later, where it tends to be only 4 payments, and that could be monthly or fortnightly. Ours goes over the 12 months period. And lastly, as I mentioned before, is the data mining and the direct marketing through Zink Pay. If you think about the opportunities to market different products and services across 5 countries, the revenue potential is unlimited. So who's our competition? Well, there are direct debit providers in the UAE. We are not the first. However, we are the first industry and bank agnostic solution. And what does that mean? Well, if you look at this chart, some of the solutions are very bank driven. So you must be a bank customer, whether it's the payer or if you're the biller. Others are only payer initiated payments. So it is the payer that drives the direct debit, and therefore they set up the direct debit, but they can also cancel it, which doesn't give billers that confidence that they're going to get paid. And others, such as Urban or Ajar, as an example, which offer very good solutions, tend to be industry specific. So they only deal in rent, or maybe they only deal in insurance. Zink Pay can work in any recurring service market. So as new industries come in, and as long as they're obviously recurring or service, our product is highly flexible and can create new industries on the fly. So what is our competitive advantage? Okay, so because it's aggregated, everything is on the one dashboard. So billers can see everything. We create different hierarchy rules, so you can assign different levels of access and different account levels. Everything is automated. The payers can see everything that happens at the same time the biller can. So when the direct debit is successful, both the biller and the payer see it immediately. If it fails, they're both notified. As I mentioned before, it's a biller-initiated direct debit, so only the biller can cancel or suspend the direct debit, which gives them the same confidence as they are currently doing with checks today. We do provide automatic reconciliation. So we have seen large organizations with whole teams of people in the back in the office manually reconciling payments against statements. So this eliminates that entire back office task of daily reconciliation. Everything is able to view on a single dashboard. And as I said, because we're bank agnostic and we're industry agnostic, we can move into any industries very quickly and easily, as long as, for instance, gyms, as long as they're willing to use the direct debit service.
Yeah, our investment rounds to date have been very good. Our angel round was in February of last year, and we had a valuation of $1.5 million, raising in that round. We had a significant raise. Then our next round was a pre-seed round. We had a valuation of $3 million, which was in May of last year. And now our current round, our valuation is at $5.5 million. Now, a very, very realistic valuation given the market today. You know, we have gotten significant feedback from the market that they have, given us, a sense of strong market confidence in our solution. Our capital raise to date, as I stated there, we're seeking up to $1 million at a pre-money valuation of $5.5 million in this round. Now, future capital rounds, please ignore the dates on this, as they have, we're staggering them a little bit further out. But we estimate our pre-series A round to be circa 9 million plus at this stage. And in that round, we'll be seeking to raise 1 million. Now, at that time, we'll have launched across the UAE. We'll have built out our payment capability, and Saudi Arabia would be in our crosshairs. We will be at the initial stages of rolling out in Saudi. Now, our next round will be our pre-series A round. Again, an estimate is, 20 million plus pre-money valuation. It should be noted here that we have a SAFE with a VC capital firm in the UK called Ground One Ventures. And that can be triggered at a certain milestone, and that will be up to us when we want to trigger that. At that point, we will have built out and expanded our solution across Saudi. And our next cap raise round later in the year will be a Series A, probably early next year. We, at a minimum, estimate to be at a pre-money valuation of circa 45 million, again, seeking to raise circa 10 million. At that time, we will have reached, we'll have built out across the UAE, Saudi. We will be in the initial stages of expanding across into Egypt, and we will also have launched our ServiceNow Pay Later. Again, this slide here shows our estimated valuations post-revenue across year 1, year 2, year 3. This will be based upon the fact that we will be operating in 5 countries, having circa 10 million plus accounts, active accounts, with a ServiceNow Pay Later ability, and dipping our toe into direct marketing.
So what are our milestones to date? So we started the process of looking at the UAE and other GCC markets actually in 2019. And we went through a phase of discovery. We built an actual proof of concept, which we developed, and we tested it on a number of clients, which we got positive feedback. In July and October, that's probably when we started testing it. In April, in March 2020, we started the process of incorporating Zink Pay. So Zink Pay is incorporated into the Cayman Islands. We raised another 350,000 in pre-seed capital. That helped us to start building out Zink Pay. Now, Zink Pay is it's a different sort of startup, where most startups will build almost bootstrapping their solution. Zink Pay is built off a core banking solution, which is used in a number of countries in the GCC and in Pakistan and in Asia. And primarily the reason why we used a core banking service was we wanted the same robustness and customization and ability to move into different markets quickly and easily than if we built it from the ground up. So that allows us to do our auto reconciliation, settlement instructions, integrate into different payment rails, integrate into banks, a lot faster than building something on our own. In December 2020, we then incorporated Zink Pay in the UAE, which we have a UAE partner, Alexi Investments. So they're our UAE. They introduced us to a number of partners and clients. And our aim is to launch the MVP at the end of Q1. We do have a partner bank, but unfortunately we are not allowed to announce it. They will announce it hopefully at the end of this month or the next month. And we have expanded our team. We have a project manager, we have a strategic dev, we have our marketing management team, and we have an entire dev team that's located in the UAE, Pakistan, and Malaysia. So our core management team is 4 gentlemen. One is myself, and my experience has been around payments and digital banking, open APIs. I've been pretty much a pusher of change. I've never liked the status quo. And that's why when I came into the UAE, I was surprised that cheques were still being heavily used. My background is an Australian background. We don't use cheques, or rarely use cheques. And in fact, I had just finished a project re-engineering a similar solution in Australia, whereby all rents and leasing and insurances and all that are paid automatically through a recurring payment services, whether it's card or direct debit or a bill payment. Then we also have Dr. Padraig McGrill, who is also a co-founder and a co-CEO. He brings a wealth of 25 years experience of legal, risk and compliance, particularly in technology and finance. He's very well sought out in Ireland for his knowledge in payments. And he's been on the journey with Zink Pay from the start. We have Raheel Iqbal, who is the head of delivery. is a seasoned technologist with over 14 years experience. Rahil is also the CEO, Managing Director of Code-Based Technologies, which is a core banking and digital banking service provider. And lastly, Dr. Omar Mansour, who is our lead architect. He effectively ensures that our strategy is on the right path and helps us to streamline many of our processes and procedures to ensure that they fit with each country that we plan to enter. So thank you very much. I hope you enjoyed that presentation. I'm going to now open it up to questions and answers. So the first question, and I think is, please show an actual transaction flow from both payer, biller and payer perspective. Share if you have any wireframes to understand how the product will work. Yes, we do have a process flow. We generally don't show it unless there's an NDA in place, because it is sort of first to market. But happy to email you if you would like that process flow.
I have one question here. What are the legal consequences of a failed direct debit versus the legal consequences of a bounced check? Now, from a legal perspective, a direct debit authority, once you're setting up your direct debit, you have to sign off on your, as a payer, your direct debit authority. That document, well, in our case, it will be digital. That document constitutes a legal binding contract between the payer, the payer's bank, the biller, and the biller's nominated bank, where the proceeds of that transfers to be deposited. Now, pursuant to that direct debit mandate, the payer is required to accept the terms and conditions when setting up the direct debit. This results in the contract, since it is a contract, it's construed and governed by the laws of the UAE, and when and if there is a dispute, then one must go to the courts. Now, as of January this year, there has been an amendment brought into full force and effect around the UAE's commercial transaction law. Now, a bounced check for insufficient funds can no longer be criminally prosecuted. A criminal prosecution for a bounced check has now been limited to cases of fraud, forgery, or bad faith. Now, in essence, what that does, in summary, is make checks one of the dodgiest and most expensive payment methods in the UAE. What this amendment has done has taken away the security that, or the misplaced security, I should say, that businesses have had around a check as a secure payment method.
We've got another question. Have you gotten any traction from billers? Yes, we have. Interesting enough, the larger the organization, the more keen on Zink Pay. We've had positive feedback, particularly not only just around the direct debit, but mainly around the reconciliation. And we've had some organizations who have asked us, could we just use the reconciliation platform? Reconciliation is probably the biggest challenge in many major organizations. It is extremely manual today, or requires a lot of integration into different payment service providers. So one of the key things, because we're an aggregated payments and reconciliation, we provide a single reconciliation that combines every payment type in a single daily reconciliation file. So we don't care if it's a direct transfer, we don't care if it's an international payment or a credit card or a direct debit from an account or a wallet payment. It is one file, one single integration to our client's backend software. So as we add on new payment services, there is no impact to our client's software. So we cut down on the integration time and the reconciliation time of trying to handle multiple payment services per biller. So the larger the organization, interesting enough, the easier the conversation. We thought it would be the other way around. We thought the smaller clients would love this, and the larger ones would be the hardest sell, but it's actually been the opposite. We're seeing large organizations with customers of 100,000 plus, from leasing, insurance, real estate, finance, who have a major problem today.
Yes, we are going to partner with in the various jurisdictions that we operate in. We are also going to have strategic partnerships with companies in the different verticals we will be operating in, be it auto leasing, insurances, medical or auto, and also real estate, just to name a few.
So one of the questions is, what's the difference between a bank direct debit and your direct debit? I can pay my rent today if I wanted to through direct debit. Okay, that's a good question. The bank initiated direct debit today. So the banks offer two direct debits. They do offer a payer initiated direct debit, and they also offer to very small minority of billers a biller initiated direct debit. On the payer one, as I mentioned before, payer can set up a direct debit. Banks will charge you for that direct debit. But billers don't see that transparency around that contract or that direct debit. Second thing is, payers can delete the direct debit at any time, leaving the biller without any protection. The Zink Pay solution, as I mentioned before, is completely biller driven. So biller is initiating the direct debit. The biller has control, but the payer sees everything on their app. So they see when the direct debit is due. We notify payers in advance, so we give more transparency. We inform payers 7 days before, 3 days before, and on the day of the direct debit. We also provide an auto retry facility. So a biller can opt in for an auto retry. So if a payer failed because of insufficient funds in their account, we can reschedule another direct debit in 2 days, 3 days. You can do a number of auto retries, and then only then, if they fail, then the biller can take action. Next question. When do you think the company is going to break even? That's a good question. We think the company will probably break even probably about 18 months into our launch. We are constantly developing and enhancing our product and services. So we plan to not just stick with just payments and reconciliation. We do plan to do more integrations into other payment platforms so that our clients don't have to do it. And we do plan to do more product releases. And there's a lot of cost into entering new markets. But because of how many accounts that many of our clients have or potentially have, one particular client that we're working with right now, I think Ms., if you might want to talk about that, might be, I think, about 300,000-400,000 accounts. So if they manage to migrate everybody over the Zink Pay platform, that's a lot of revenue. Not only are we making it from I think it was 30 cents per US dollar per account per month, but we're also making fees on the transaction fees. Now, direct debit is the cheapest, one of the cheapest fees. Once we start launching cards, instead of making 60 cents a transaction, we're looking at about $3-4 US per transaction. So what we presented to you was on the basis that, okay, it's only just direct debit, but as we start introducing more payment options, some of these payment options earn a lot more revenue for us. than a direct debit or a direct transfer solution.
Timmy, there was a question there around corporate structure, the Zink Pay corporate structure. So we are, our holding company is incorporated in the Cayman Islands. Our operations company is incorporated in the UAE. Now, later this year, we will be opening our international arm, which will be based in the ADGM in Abu Dhabi. Now, as we move across MENA, our subsidiaries will sit underneath our international arm. So part of the reasoning with our corporate structure is that we are going to centralize certain functions around legal, compliance, risk, marketing. So we run basically a cost-effective operation, and we keep our knowledge centralized. So our subsidiaries will benefit from a more comprehensive rollout of whether it be legal, risk, compliance, product, or whatever else there may be in the mix.
Okay. Another question, where are your current investors from? They are so our chairman, who is one of our major investors. He's from Australia, owns a number of real estate and property management companies. So, and actually had a number of businesses here in the UAE, so he knew all about the pains of cheques. Our other investors are located in Ireland, UK, and in the UAE. We've gone particularly around more private investors, and with the help of Eureeca to get some more crowdfunding investors. We have a number of VCs who are waiting for the next, the pre-series A round, with pretty much a lot of that 1 million already pre-booked. So this round is a very good round for a number of reasons. One, it's not a very high valuation. We try to keep it as conservative we could. We have a safe, and that safe will trigger a 20 million evaluation pretty quickly. So that can actually happen after the next raise. And so for a lot of investors who are looking at us, they can see that even within the first 12 months, there is an opportunity to increase the value of their shares very quickly. But it depends on when we launch. Question, how does the latest regulatory changes to decriminalization of cheques affect Zink Pay's future? That's actually a good one, because up until January this year, cheques, if you bounced a cheque, it was a criminal, there's criminal repercussions. Now, some Emirates like Dubai had changed their rules to say, okay, up to 200,000 dirhams, it's a civil matter or a fine. But other Emirates were still heavily, if you bounced a cheque, a biller could call the police on you if they wanted to. Since January the 2nd, cheques are decriminalized, which means that unless it's a fraudulent cheque, a biller has to now chase the client through the courts. So now our clients or potential clients are sitting there with a very expensive cheque system without the same criminal protections that they used to have before. So the conversations actually become a lot easier because now the billers are saying, okay, well, it's costing me $5 per cheque. I need to reduce my costs. And if direct debit has the same legal weight, civil legal weight as a cheque, well, I might as well move to electronic payments. And we are starting to see the market move to offering cards for reconciliation purposes. A Cards are great. We all love it. Biggest challenge for billers with cards is that it costs a lot of money to process. Usually billers in the UAE can be charged between 2 to 3% on a card transaction. So it's quite high. I think that's it for Q&A. I'd like to thank everyone, the panelists and all the attendees who joined. If you have any questions, please feel free to contact us. A lot of the information is available on Eureeca, and I think it was posted with the Eureeca link. If you would like to learn more about Zink Pay, feel free to also reach out to Padraig and I and Ms. If you'd like to ask any questions, we can be contacted on the Eureeca crowdfunding campaign. And we look forward to obliterating checks in the UAE.
Thanks very much, everybody. Really appreciate it.
Thank you.
Thank you.
Thank you.